Hello everybody. In this video, I'm gonna show you how to use the stock screener in stockpenguins.com to basically screen for stocks. Okay, this is not a expert tutorial. This is a simplified beginner tutorial to kind of show you how this can help your investment process and stuff like that. Right, so think of it as a guide. All right. So a stock screener, if you go to stockpenguins.com/screener, we've basically built a screener over here so you can take advantage and filter out stocks that are potentially interesting based on financial metrics over here. All right. So, for example, I'll give you the example. Okay. Um, if you are looking for high risk, high returns. Okay. So I do not know what your investment risk appetite is, but it's not my job to figure out as well. You know this better than yourself, better than me. Okay, so if you're looking for example, just this is the scenario here. Okay, we're gonna cover low risk as well. But if you want like high risk, high returns types of stocks, this is how you screen for it. Okay, and when I read, what do I mean by high risk, high returns? Okay, generally, I would say fast growing companies. Some of them can be unprofitable, and they are generally a smaller market cap. Okay, the reason why a lot of people think these are high risk, and it technically is because you have no idea whether the investment will work out or not. It's because a lot of them are like in the tech sector and then they are unprofitable. However, they are fast growing, and because they are fast growing, it's also high risk. Okay, the entire company could implode at the same time, because it's also a smaller market cap. So smaller companies are generally more prone to economic swings in the economy and stuff. So interest rates really affect, because the cost of capital increases and then it's very difficult to borrow money and stuff like that. Okay, so I'm just giving you an example here. Okay, so personally for me, I like to look for stuff in maybe anywhere from like the 3 billion to like $30 billion market cap range. And the reason why is because in order for me to get a 3x on my investment, right? So in order for me to get a 10k, and for my 10k investment to go into a 30k, for example, is basically a 3x. The market cap basically needs to go from a 3 billion to a $9 billion market cap, which on paper it sounds reasonable, but at the same time, because they are a smaller company, there's also a lot of risk, right? They may not be able to pull it off. However, if you are okay with that risk, then potentially you want to use this. Okay, so what you want to do here, for example, you come into the screener, and personally for me, I'm looking at anywhere from a mid, right? So anywhere from 2 billion to 10 billion. So this is my sweet spot range. All right, and then the thing will refresh, and I'm looking for stuff that is actually already profitable. So I'm going to look at a price to earnings. So if there's any earnings, it means it's a profitable company, that's net income. So I'm going to put profitable here. So I do want a profitable company. I don't want unprofitable companies. But at the same time, I want the revenue growth. You can see revenue growth in the past 5 years. I want it to be over 10%. Okay. So any company that actually grows like 30% year over year is actually a very fast growing company. So I'm just going to put 10%. And then I'm going to put revenue growth quarter over quarter. So this one, I just want the revenue growth to be positive. Okay. And then there are other metrics that you can also input. In here, I'm probably not going to be very strict. I'm going to put the net profit margin just to be positive, just to make sure it's profitable. And then I want to also see a gross margin, right? So gross margin is important because it's the amount of margin you have to play with to actually flow down to the bottom line. So I would say like anything above 50%, let me just put a gross margin of more than 50%. All right. So you can see these are the specific companies that they have given to me based on this criteria. And so when I look at it, for example, I can see stuff in different industries. Okay. If you want to filter your industry, there's an industry tab over here as well. And you can see everything is here. Okay, so for example, if I'm only interested in technology, then I'll probably go and find technology. Yeah. If I'm not so picky, then I do not need to do so. Okay. So I'm not very picky in this situation. Okay. And what I'm looking for is that I know all of these companies are quite small companies. I also know I'm looking at the price to earnings here, and I'm price to earnings historical. Okay. So what I'm really looking for is that the price to earnings in the trailing 12 months, for example, if it's lower than the historical average, it probably means it's a cheap company, or the valuation is cheaper than normal. So like that is potentially interesting. And over here there are some brand names, right? There's like Birkenstock over here. Roivant is a pharmaceutical company. Crocs is a shoe company. Abercrombie is a clothing company. So personally, this is just a personal preference. You don't have to use this information. But I don't 100% like consumer stocks in consumer goods in like public companies. The reason why is because the recurring revenue is not very very high. So the certainty that the company will grow year over year is not very certain. Even though the revenue can be very high, the net income could be low. Yeah. So it really depends on what you prefer. All right. So over here I can push it to 50, so I can see 50 stocks at one time. And then if I push it to 100 as well, I can see 100 stocks at one time. So you can see here, Elf here. Elf is a beauty company. And so if you find something interesting, you can just click into it and then you can start exploring along. All right. So this is a way to filter, and that's how you do it, a filter. So let's say you are much lower risk. Okay. It's not that you want low returns, but generally lower risk means lower returns. Okay. Let's just put like you just want safe companies. Okay. You want safe companies, you want big companies, and you want them to generally be a big market cap at the same time, right? You're not looking for 3 to 5x in returns. You're maybe looking at just beating the index, right? So if you're just beating the index at doing better than 7% every year, generally it means you're doing well. Okay, so how do we filter this? Okay, so on the right hand side, let's clear the filters here first. All right. And then, okay, I want a big company. So generally market cap anywhere from, I would say more than, where the large caps? Yeah. Anywhere $200 billion and more. So these are like the biggest companies in the world, right? Basically. Okay. The price to earnings, once again, I want it to be profitable. The net profit margin, I want it to be positive. Okay. The gross margins, a good company, generally the gross margins are very, very high. But I'll still put it at 50% here just to be a bit less strict. And revenue growth past 5 years, I just want it to be positive. I'm not looking for major growth. I'm just looking to grow. And revenue growth here, quarter over quarter, positive. And this one is important, net income growth. So every single year, they should be making more profits than before. So this is once again positive at the same time. Yeah, you can play around with the historicals, like PE, historical stuff like that. But not extremely important to me specifically. Okay, so you can see here, a lot of the names here in this list are the big companies that you're very, very familiar with, right? You got Nvidia, Microsoft, Facebook, TSMC, MasterCard, etc. And so generally you can see, right, it's a very, very safe list, if you want to call it. Okay, we stretch it to 100 list, and there are probably only a few companies. You can see, based on these filters alone, there are only 27 companies that match this, that's why it's a very, very short list. But these companies are the biggest companies in the world, basically, right? So what you want to do is you want to go into an individual company and then you go and analyze whether you like that company or not. All right, so that's basically how you use a stock screener for yourself, and that's how you basically yeah. All right. So what you're looking for, I won't go into so depth, but you can see Elf Beauty here is one of the high risk stocks that we were talking about, right? What you really want to look for is that your revenue growth is accelerating or is growing at a fast clip or consistently, right? Can you see the skyrocket in this? Yeah, this just goes to show that the company is doing well. The company is making more money than previously. Right? If you stretch it to an annual basis, you can see it just skyrocketed in 2024, right? They basically make almost $400 million more in revenue here, and this corresponds to the stock price at the same time. This is a very good curve, and this is why this company is being valued. Yeah, this is why this is a growing company. It's a $6 billion company over here, and it's making about $1 billion in revenue. So hopefully this trend occurs if you're optimistic about this household beauty business. Yeah, then this is potentially the company for you. Yeah, but that's basically how you use the screener here, and then you find based on financial data. Okay, you don't base it on people's opinion. You base it on financial data, and you go and find the companies that are worth your time, and then go and do more investigative work from here and the charts as well. All right. So yeah, let's just do one for the big companies right here. So I'm not familiar with this company right here, this drug manufacturer, but I can see it's about a $300 billion market cap, a very very big company. And the price to earnings on a trailing 12 months is 56, and the historical is 31. So you can quite clearly see that it's getting expensive because we are paying much more than the historical. We're paying much more than the historical. So just based on this alone, I'm already not interested. But for the sake of this video, we'll just open this company right here. So obviously after you go into an individual stock, you want to actually do proper research for yourself so that you understand more about the business model and stuff like that, right? And of course, if you are going into a stock and in an industry that you don't really understand, so in this case, healthcare, I personally don't understand. Okay, I understand more technology and advertising. Yep. But you can see from the data, for example, you can compare this to the peers, right? You can see you're looking basically at the biggest companies in the world, and you're basically comparing their price to earnings versus this one as well. Okay, but you can see here the revenue has been growing, has been a large spike here, and then suddenly it tapers off. So personally, purely based on the numbers, right? I have no idea what this company actually does, but purely based on the numbers, I probably would not invest in this company because I do not see accelerating revenue growth. And it's choppy, it's very, very choppy. It's like it's going up and then it's stagnating here, which does not give me certainty that this business is going to grow further. But even if it is, going to grow further, it doesn't suit in my investment appetite because I'm looking for consistently growing companies. All right. I'll give you an example of a very, very consistent growing company. But this is in the technology sector. So this company right here, this is ServiceNow. If you want to see what a great financial statement looks like, it's this. You can see here every single quarter, without fail. I have no idea how these guys do it, but you can see the graph is absolutely beautiful, right? Look at this, it's just absolutely beautiful, right? So this is the type of companies you want to invest in. Companies that are consistently growing revenue, and correspondingly the market cap will increase as well. And this is a good thing, right? Maybe this past quarter it's a bit slowing down. You can see the gradient is a bit slowing down, but based on a historical basis, it looks like this company has been innovating. Yeah. Okay. So this is, I just want to give insight on like the investment process so you guys understand how to use this tool for yourself. And yeah, so you are able to find these types of companies and companies that you would not have found in the past. Yeah, based on historical data as well. Yeah. If you have any questions, feel free to drop them down in the comment section below.